What's up, guys? So, as I'm sure most of you are probably already aware of, stocks are down huge today. I mean, look at this chart. It is bleeding red, and you'll be struggling to find some little ounces of green bits. So, in this video, let's go over some of the stocks that have crashed, what's happening in the market, and my overall opinion on what's going on. And this video is not my normal type of animation video, but this was just so I could get out this information quickly, as it is big news. So, hate to break it to you guys, but stocks are down. Tech stocks have had their worst day since 2011. All 65 components of the S&P 500 Information Technology Index fell on Wednesday, and we'll talk about some of the big ones that fell soon. And the big reason appears to be because of rising interest rates. We'll also talk about that soon. So some of the big stocks that have crashed include Mr. Google, down 4.63%. Facebook, those guys can't catch a break. It seems that every bit of news coming forward for them is negative, down 4.13%. You've got Bill Gates' beloved Microsoft, down 5.43%. And the two big ones that are down are Amazon and Apple. Amazon has actually gone out of the $1 trillion company market cap, as you can see over here. And this was caused by this decline that they have been on over the past week, really, and in particular today. And Apple was still in that $1 trillion range, but only just sitting at that rate of 1.05 trillion. So as you can see, Amazon is down 6.15% and Apple is down 4.63%. Some more stocks that are down include Netflix at 8.38%, Twitter down at 8.47%, and Nvidia, the gaming company, down 7.4%. So this is really big news, guys. It's not just about that 0.5% of a move that we normally see in the market. These are big moves downwards. Let's take a look at some of our Chinese stocks and how they are faring. Baba, oh no, my Alibaba is down 5.89%, JD down 4.5%, IQ down 5.24%, and Baidu 3.28%. So yeah, it's been a bloody red day in the market, excuse the pun. I guess we should start talking about what has caused the market to crash. So as per the CNBC article, it seems to be the concerns over rising interest rates. Another thing that is really important to look at is the fact that we have really high stock prices. One way to look at this is by looking at the USA's S&P PE ratio. What are the prices looking like compared to what's being produced? So this is a graph of the S&P 500 PE ratio. At the moment it is 22.75. We can see that is really high compared to historical levels. Historically it has been around 15. So we got two things here, high stock prices and rising interest rates. So when the stock market is at really high levels, rising interest rates makes bonds and fixed interest investments more attractive because you're going to get a higher rate of return on them. So what happens is you get people moving out of the stock market and into more safe investments. This causes stock prices to go down. This begs the question, how can we prepare? And I've talked about this a lot in my previous videos. It's the ones that have been titled stock market crash or something along those lines. But the four main strategies that you can use are: 1. Hold more cash and cash equivalents. This is the strategy that Warren Buffett uses. This way, when stocks crash, you can purchase more stocks at cheaper prices. 2. You can buy gold and gold mining stocks. You see, gold tends to do well in and particularly in the short period after a market crash. This is because when stocks crash, people look for safer investments like gold. Number 3, you've got buy high, secure dividend paying stocks. This way, when the stock market crashes, you will get trustworthy and safe dividends. And lastly, you can diversify across countries. This way, when the USA stocks crash, you will still have investments in other countries. Now, other countries tend to follow the USA, but they are unlikely to crash as bad. And one of the most important things to do, guys, is realize that a crash isn't all that bad. Now, I remember reading this quote. It was either by Warren Buffett or in a Benjamin Graham book. I can't quite remember. Anyway, they are arguably the two greatest investors of all time. And I can't exactly remember the quote, but it went along the lines of, The amount of money we will make in our lifetime depends on a few factors, and a big one is how much opportunity we get in the stock market through the volatility of the market. Essentially what he was saying is that a market crash is actually an opportunity, not a tragedy. And the more market crashes we have throughout our lifetime, the better, because you can purchase stocks when they are cheaper. And weirdly enough, that's my favorite time to purchase stocks, when they have gone down, when they are cheaper, when they are on sale. Just like I enjoy purchasing a good quality pair of shoes or a car on sale. I'm the same with my stocks. I hope you guys are too, and I hope you guys have a great day despite the stock crash. Guys, I'll catch you in the next video.